Hey everybody, Courtney Smith here with our February 20th, 2023 edition of Wall Street Winners, our 28th year in providing excellent advice. What can I say? Profits every year. Unusual. All right, so I'm just not that bullish anymore. I'm just not feeling it, if you know what I'm saying. So I think we're still in a major bull market, but it's just seasonally we should expect to see the market dip. And we're seeing lots of evidence of that dip. So let's just take a look right here at the S&P. Clearly, we have a little mini downtrend here. It's probably a flag formation because of the declining volume. Now, that is bullish eventually, and we're going to want to be a buyer of the market, but not for a week or two. It's time to just sit on our hands and do a lot of nothing. I know that's not exciting, but sometimes discretion is the better part of valor. Over here in the Dow Jones, we're even struggling over here. We haven't made a new high since December. Not good. Over here, you can see that buying pressure remains higher than selling pressure. The little green line is higher than the little red line, but it's declining. It's narrowing. The jaws of the alligator are closing. NASDAQ has been better, but there's a couple of signs here that things are not that good. So once again, we have the little mini flag formation like the S&P. But look at the purple predictor. The purple predictor was running along on top of the price action, which means that the smart money is running along with the dumb money. But notice all of a sudden, we see that the purple line here, the purple predictor, which is on balance volume, is running under the price action. That means that the smart money is taking profits here, okay? They are leading the selling in the NASDAQ. Bearish. Our seasonality indicator, we remain on a buy signal. I won't go put it to a sell signal until we break this major low down here. And I am looking, as you can see here, the IWM, which is what this chart is the Russell 2000. And you can see it's more bullish than the other three indicators. So small caps is the place to be. Notice the purple predictor is running above the price action, showing that the smart money is buying small cap stocks, which are generally speaking US oriented, and they're selling big tech, the NASDAQ. Utilities, who cares? Over here, here's the seasonality that I've been talking about. This is the little dip that we should be expecting here until we get to March. So we've really got another couple of weeks to go before we can say it's an all clear. And then look at this explosion, 2 straight months into May on this on the seasonality. Last year's seasonality worked perfectly. So far this year, it's working perfectly. So I think this makes the best sense scenario. So we're going to wait for the little dip. We're not being aggressive at buying stocks at all. No new trades in our fully paid up members this week at all. And then we'll start to get aggressive in a week or so. Money is coming out of the bond market. It's what's supporting the stock market. So once again, we're showing you who's doing what to whom, because the internal dynamics of a market reveal if it's a sustainable bull market or a real bull market, or whether it's fake-orama. This is a real bull market. We've got the smart money buying until the last couple of weeks, and we've got money coming out of the bond market and into stocks. In addition, they want more risk. Now, the last week, they don't want any more risk. They're kind of saying, well, okay, we took a lot of risk. We bought those risky, sexy NASDAQ stocks. We've got enough. We don't need any more risk here. Global shares are outperforming the U.S. shares. I'm long the EFA ETF, and this is holding up very nicely. When you see the U.S. market coming down and global shares staying sideways, that's a bull sign here. So the place that we may want to do when the seasonal dip is over, we may want to come in and be more aggressive at overseas stocks rather than domestic stocks. Inverted yield curve moving slightly in a more positive direction, but it's so negative. It's telling us the recession is going to last a long time. Bonds there, you can see them coming down here. I told you last week they were going to come down. I told you the week before they were coming down. They're going to continue to come down. We're going to break these lows right here. I don't think we're going to get all the way back to the lows we made in October, but we are going to break these lows right here that we made in January of this year, right at the very beginning of the year. And here's why. Take a look right here. We're seeing the biggest competition is the green line is 10-year treasuries. The blue line is 10-year treasuries in Germany. And remember, when the yields go up, that means bonds are going down. So the previous chart was bonds. They were going down. That means yields are going up. And you can see that one of the reasons was right here. Here's the price of gold. Gold is a leading indicator of interest rates. And you can see it had a major, major bull market. So that is putting upside pressure on bonds. But the chart in the background is going sideways. And that's one thing that tells me we're not going to have a major bear market in bonds or major bull market in interest rates. But if we have higher interest rates, that makes the dollar more attractive. So I'm back to being bullish on the dollar. But I believe that this is a counter trend move inside this major bear market in the dollar. And it's because we have a difference in the business credit cycles between the US and mainly Europe. Okay, very, very different. So we're going to see big swings in the dollar this year. Right now, we're in a major counter trend move, but this bear market in the dollar is going to continue for the whole year after this bull is over. But the bull is going to continue for the next several weeks. Now, if this bull market is continuing for the next several weeks, you know what that means. Gold's going down. Don't want to be in gold. Now, and I'll show you the gold key indicators here in a second, but notice though that there is some buying from the smart money. We make lower, 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 but purple predictor is going sideways, showing that the smart money is starting to buy down here at about the 1840 level. So that gives me some confidence. Now, the other thing is notice the RSI. If we get down close to 30, which might take a couple of weeks, then that would be another strong buy signal. Look at the last time we got down to 30. Good buy signal over the short run and ended up being a very good buy signal over the long run. Now here's the price of gold. We now have one neutral indicator and two bearish, clearly bearish, somewhat bearish, but nonetheless bearish all over the place. So look for gold to continue lower over the near term. What can I say about crude oil? If you've been following me for some time, I'm bullish one week and bearish the next week. That price action looks terrible. But fundamentally, I think we're in a very bullish situation with the reopening of China, which is going to increase demand for oil by at least 1.5 million barrels a day and as high as 4 million barrels a day. At the same time, we're seeing supply shrink. But notice Friday's price action was down reasonably hard on reasonably heavy action. So I have no position in crude oil, but I want to get long more energy stocks. And we've got some in our fully paid up members portfolio, and they're doing fine. I keep looking to want to buy more, but since we're not getting a huge bull market in crude oil, it's not going to happen for now. Now, Bitcoin, talk about whipsaw-orama. We get this insane bull move up here, then we get a drop down, and then we break to new highs. Amazing. But over here, look at the purple predictor. It led the rally to the upside. Oops, let me go back a page here. We don't want to be here yet. And then we get the explosion to the upside, but the purple predictor is not going up, which tells me the smart money is selling into this rally. I have no opinion on Bitcoin. I think it's going to follow the stock market higher. So in general, I'm bullish from that perspective. But I'm just not that excited. Hey, freebies, you know we love having you here every week watching the free edition of Wall Street Winners. But let me give you a little bit of a pitch of why you should actually upgrade and get the fully paid up member version. The big difference between them are two big differences between the freebie and the fully paid up version. Number one, the fully paid up version has more extensive analysis which means that the prognostications are more accurate and you get greater insights into what is actually happening in the market and why it's going to happen. But we're also talking about the dollar. We're talking about the bond market, the crypto market. But of course, we focus on the stock market. So better, greater, more analysis so you understand what's really going on and how reality is creating profits and how we're going to create profits in the market. Number two, and this is most important, there's actual trade recommendations. So in the freebie section, I say, well, I'm bullish on the dollar, or I think we're going to have a dip in the market and then explosion to the upside, whatever I'm saying. You want to be able to see what I'm actually doing in the real world. So I put out specific recommendations. Now, these recommendations are actionable. They tell you exactly what the stock is. They tell you exactly the price to enter, and I tell you exactly the price to exit. So there's no doubt you can take action and you can make money. We're pushing 3 decades of publishing Wall Street winners, and every year has been a winning year. I don't care if it's a bull market. I don't care if it's a bear market. My job, because I am a professional investor, and I do the same trades that I recommend to you, by the way. I'm putting the same orders in. So you and we're going to see the same profits. But here's the point. As a pro trader, my job is to make money trading every day. Every day. I wish I could make it every day. Every year, okay? Every month. Because I need to know I want to buy steak, I don't want to eat oatmeal. You got it? All right. The difference between Wall Street winners and all the other newsletters out there are, number one, I'm a professional trader. They often are amateurs. Number two, I ran the top performing global macro hedge fund in the world. How many of them have ever run a hedge fund, let alone a top performing one? Hulbert rated this newsletter, Wall Street Winners, as the best performing newsletter ever. Number three, I also manage the number one growth mutual fund in the United States. Quick! How many newsletter writers have ever managed a mutual fund, let alone a high performing one? So, what you're getting is my 50 years of experience at picking stocks and making money. That's why you should subscribe. This is a newsletter that doesn't cost you anything. Yes, you have to pay money every month, but the profits from the trades should more than cover the cost of the subscription. So this is a free newsletter if you take action using the trades that I put in here. Anyway, I hope to see you upgrade and become not just a freebie member. You know we love you, but we'd love to even have you come as a fully paid up member and get even more value than you're getting now. All you have to do is go to WSW2021.com. That's WSW2021.com. Sign up. Let's get going. I want to share greater analysis and great trades with you. We'll talk to you later. Thanks very much, freebies. You know we love you.